Tonight's Market Monitor says he is finding opportunities in online retail stocks. He expects online retail companies to account for 20% of all U.S. retail sales within 5 years. Right now, that figure sits just below 10%. This is his first time on as our Market Monitor. He is Christian Magoon, founder and CEO of Amplify ETFs. Christian, good to see you again. Thank you for joining us tonight.
Good to see you as well. Thanks.
Now, you see what kind of growth? We're going to talk about three companies here. You see what, 20% by the end of the year? What's going to be the catalyst for those gains, do you think?
Well, most of the catalyst for online retail stocks is really growth in sales and market share, but then overall growth in online retail sales. Right now, online retail sales are growing by about 16% year over year, whereas department store sales are actually shrinking. So they're in a sweet spot where they're carving out market share from brick and mortar, but also increasing their customer penetration rate.
And you point out that it's not just Amazon. A lot of people think of online shopping as simply, they always go to Amazon, but you picked three stocks that you think are very interesting niche plays. Etsy is your first pick. Why do you like it?
Yeah, so this is an online platform for handmade and vintage goods. We think it's a very unique platform to buy things that really have kind of an experience with them. They're not just something you'd find in a typical brick and mortar store. They're very unique. And this could be an interesting play for a merger or an acquisition, whether it's a brick and mortar company trying to get their toe wet in online retail and buying a platform like Etsy, or somebody already in the online retail space trying to expand into this handmade and vintage item area.
Then there's a company in a very competitive part of the online world in food and meal delivery. You're talking about Grubhub here.
Yeah, Grubhub is definitely in competition with companies like Uber Eats, for example, but they have some strategic advantages. One is this recent exclusive deal they signed with Yum Brands to exclusively deliver KFC, Pizza Hut, Taco Bell, etc. They're becoming kind of the largest entity in the U.S., but it's a competitive space it's a competitive space bill, and I'd be interested to see kind of what happens in this marketplace. But we see it going higher over the course of the year.
And let's finish up with Carvana. I was really stunned at the amount of revenue growth that this company has come in with, up 127% year over year. That's obviously one of the reasons why you like it.
That's right. It goes hand in hand with their car sales. So they sold over 18,000 cars, pre-owned cars last quarter. That was a growth of about 127% year over year. They're building this online platform to buy, inspect, finance pre-owned cars, and that's becoming a growing area here in the U.S. They're national, and we think they can continue to improve. Their big challenge is they're still not profitable yet, unlike the other two stocks that we spoke about.
Well, that's certainly a big growth area, that's for sure, in online retail. Christian, thanks for joining us. Appreciate it very much.
Thanks, Bill.
Christian Magoon with Amplify ETFs.